Hey traders, checking in on the stock market today. Hard rejection from the NASDAQ at key resistance, which is now the resistance for me. Netflix huge earnings dump. We'll see how that impacted the market overall. There are still places that are bullish. We'll highlight the difference in trends. So I've talked a bit about this over the past week, but again, I'm going to continue hammering this point home because more and more I am seeing people generalize and say the market is this or the market is that. We have certain market environments where everything's doing the same thing, where everything's going up, 2016, 17, Trump's elected, the markets just grind up higher, everything's going up. Obviously in 2020, early 2020, or in 2018, there were drops where everything's going down. In the current market environment, you cannot say the market is bearish or bullish because you have very clear sectors that are bearish and very clear sectors that are bullish. The way the market is weighted, tech is most important, and Amazon, Microsoft, and Apple are the three most important stocks with the weightings that they have in QQQ and SPY based on how these ETFs are structured. So you can say that tech is the most important sector and it is weak right now. Absolutely, I'm on board with that. But you've got major sectors, healthcare, utilities, energy, all coming off all-time highs very recently, and they're still looking at those all-time highs potentially in play. You've got commodities in a bull market. So just be careful when you're generalizing about the market as a whole, because it makes perfect sense to be trading tech, semiconductors, biotech sector, cannabis stocks, growth names, bearish, and to be trading utilities, energy, healthcare, commodities, which is including uranium, gold, silver, miners, all of those names, you can be looking bullish. That's the way that I am compartmentalizing the different sectors in my brain. That doesn't mean I won't trade one or the other in the other direction, but I know that if I am looking at something, instantly in my brain, if I'm looking at an individual name, it fires in my brain. This is part of the bear grouping. Doesn't mean I won't trade it bullish. It just means I'm going to trade it bullish less. Maybe I trade it with less size. Maybe I'm more picky. Maybe I catch myself and remind myself, oh, I don't want to play this bullish. I want to wait for a bounce and play it bearish. So don't keep beating your head against the wall playing counter trends. The trends will shift. The market environment will shift. But until it does, the trend is your friend. We have names in weekly, daily, hourly downtrends. We have names in weekly, daily, hourly uptrends. It is much easier to play uptrends bullish than downtrends bullish and vice versa. I will play bearish names bullish when I'm playing bounces when RSI levels are at historical extremes. Then I'm all right, let's go aggressive bullish on these very bearish names. But only then. And we aren't in an environment right now where that is happening. So I'm not aggressively trading these bounces. 5-minute oversold doesn't mean anything to me in a tech name right now, nor a semiconductor. Give me, the NASDAQ 4-hour RSI hitting historical lows over the last 3 years where we have bounced. Okay, I'm going to look to play it aggressively as a bounce. But that is where I am viewing the market. And again, just ensure that you are trading with the trend and not trying to play counter trend on a daily basis. And when the trends change, there'll be plenty of opportunity to capitalize on it. You don't have to be there the moment the market shifts. So the S&P 500 today had a good day. And if you look at my Fidelity screen, or if I look at my Fidelity screen, there's a lot of red there, and I would have expected that the S&P 500 was very weak. SPY closed flat, and the futures charts up a bit after hours as Tesla has earnings, and it is up maybe 5-6%. So the S&P 500 and the NASDAQ are reacting to Tesla earnings here. We can see that we had the end of the day, and let's see, where's SPY? So SPY closed at 444, and now it's up $1.50 higher. So SPY, you can see the daily candle looks a bit different. Gap up is for selling. We know we're not buying gap up opens. But the S&P 500 futures chart, again, we're looking for weekly higher lows. To be confident in weekly higher lows, we must confirm daily trend changes. So today was a day where the S&P 500 stood out notably stronger than the NASDAQ because Netflix dumped. And because of that Netflix dump, that wasn't your normal dump. That is a massive company that is seeing a 35 to 40% drop. And everybody looking at that is saying, oh, damn, We've got tech sector earnings coming over the next 2 weeks. I need to be real careful because I did not think things could drop 35% in one earnings report. And you have Facebook down 8% today in sympathy with that. So names that had more exposure to the business model of Netflix were negatively impacted. So even, we have a market that has bull and bear sectors like I just described. Now you have the tech sector that has more bullish and bearish names, because the names that are more tied to Netflix business model, whether you're looking at Facebook or Amazon, they were down much more. Just off the top here, we got Netflix down 36%, I'm rounding, Facebook down 8%, Amazon down 2.6. Okay, they're weaker. Apple down 0.1. Apple was not impacted much by Netflix bear earnings. Google down 1.5, middle of the road. Microsoft, not down much. Microsoft down, up 3.7%. So now you have not only the market splitting between bull and bear, you have the tech sector splitting between stronger and weaker. And again, the way that we have recently been showing how to show that, Apple divided by QQQ on the 30-minute time frame. How did we trade today? Bullish comparative to QQQ all day. How did Facebook trade today? Bearish comparative to QQQ all day. So we can't generalize in this market. There's too much, it's too specific based on whatever sector or whatever individual name you're looking at. So the S&P 500 today was flat in a day where tech got crushed. And the reason is healthcare was really strong, financial sector was green, and IWM was green. But when we lose the 4-hour uptrend in the S&P 500, which is still intact, we've got our low, higher low, higher low, higher low. When we lose the 4-hour uptrend, we zoom out and we watch for a daily trend change to try and take place. Have to confirm a daily uptrend if we're going to be bullish. We are in a weekly tightening range. The FOMC is 2 weeks from today, and it's entirely possible that we trade within this tightening range, as I've been talking about for a while, heading into the FOMC. The NASDAQ rejected from resistance first thing. This morning was a morning where I sat on my hands. So we have our clear resistance level. Aggressive bears were top fishing this resistance, and it went real well for them. Why was I sitting on my hands? So I sat on my hands this morning, not literally, but I didn't trade right out of the gate because today was an unusual day. Why was today unusual? Netflix is down 36%. Tech sector is dropping in response to that. Netflix was a falling knife. We didn't find a bottom for the first 45 minutes of the trading day at least? A long time. Look at that waterfall drop. We opened and then dropped another significant amount. Another 15% drop from the open. 5-minute stair step down, 5-minute stair step on the bounce. But while that drop is happening, I'm saying this is unusual. And if I am in the mindset of base hits, consistency, just get my, I'm in conservative mode, just get my daymaker win and move on to the next day. This is the kind of day I avoid. I do not want to trade anomaly days. I want to trade normal days. If you are looking to be aggressive and level up your account, you are looking for anomaly days to go aggressive and act on unusual market environments to try and level up. So cryptocurrency in 2017 was a very unusual market environment. Obviously, it was very bullish, but there are bears out there that made their year on Netflix today because they went real aggressive. So it all depends on the individual and the individual goals. But for me, my individual goal was, I'm not trying to hit a home run today. Just give me your normal regular market. And that was not today. So once I did see Netflix massive weakness, and I saw it infecting other individual tech names, and once I saw the NASDAQ triple top here, I made a clear statement in my mind. I am bearish the tech sector as long as this triple top remains on the NASDAQ. It's a level that everybody's looking at from space. It cannot be more clear, this resistance. So I didn't take one bull trade today. I traded NVDA bearish on a 5-minute bear flag. I traded QQQ bearish on a 15-minute lower high. So I played this 15-minute lower high bearish. There was a 2-minute rising wedge. We had members pointing out that 2-minute rising wedge nicely. Again, it's knowing the most likely scenario. After that morning dump, I know a 15-minute lower high is the most likely scenario. So what you do is you zoom in. for clues that tell you the most likely scenario is taking place. If you are a newer trader and that 15-minute lower high does not stand out to you as the most likely scenario, that's perfectly fine. That makes perfect sense. You have to see it happen time and time and time and time again. You have to put in the thousands of hours to watch it continuously play out, to then have that confidence to say, I know what the most likely scenario is. So the 2-minute rising wedge broke bear. And again, if you show me just a random 2-minute rising wedge and you don't give me any context, it's not nearly the same confidence as if you give me the context of a big dump with tons of space for a 15-minute lower high. So bearish on the 2-minute rising wedge. Then we knew to be looking for an hourly lower high. Okay, we dumped all morning. Bulls are finally shifting momentum. We know anything under the high of the day is an hourly lower high. So we know we're scouting an hourly lower high. We zoom into the shorter term timeframes to give us an indication that that lower high is being set, and we had a 5-minute head and shoulders pattern. I was live streaming for crypto at this point in time, so I did not take this trade, but I knew that I would be looking for the hourly lower high. It's the last post I made before I started live streaming is we're scouting an hourly lower high. I'm looking for a level to top fish off of. So how do I top fish? Again, this is hypothetical. I wasn't trading at this point in time, but on this bounce, if I make a bear entry over 343, I put my stop over that high. If we set a 5-minute lower high and confirm the downtrend, I just nailed the hourly lower high. If we break resistance, I'm wrong and I stop out. Look at the risk reward. If I'm in at 343 and I stop out at, let's say it's a 90-cent risk and my reward is $3 to the downside. So that's 3 risk to 1 reward. Again, I don't know it's going to drop $3 to the downside, but I can say if we see an hourly lower high and drop to a new low of the day, that's going to be very worthwhile. Even if we don't drop to a new low of the day, it will be more reward than risk. So I am now heading into every single trading day from here saying that I have a bearish lean on tech as long as this level is resistance. I will change as soon as that level breaks. Doesn't mean I instantly go bullish. It just means I flip the switch in my brain. I flip my bias. I have a bear bias if this level is resistance. And I will flip that bias if this level breaks as resistance. So on the daily time frame, we have a double top at the last lower high. Again, I've been highlighting how important this Thursday top resistance is for me on individual names. We're rejecting from EMA resistance. And if the bears are able to follow through, if we confirm a 4-hour downtrend from here, then our daily lower high is set and we're looking back at our recent low. As I've been talking about recently, I want to see QQQ divided by SPY leading this bounce, and it is not. So this is definitely a little red flag for me as far as, confidence in weekly higher lows eroding after today and knowing that it's going to have to be up to individual tech sector names like Apple, Google, Facebook, Amazon. They have to have bullish earnings reactions if we're going to see QQQ gain strength against SPY. So I am bearish tech, I'm bullish uranium, I'm bullish healthcare. We cannot generalize in this market. Semiconductors, gap up open. What are gap up opens for? Not for buying, they are for selling. And if you're not selling, then we know hourly consolidation is inevitable. So we gap up open, we see hourly consolidation, and technically we did maintain the hourly uptrend, but we are on the verge of losing it. If we see a break of 246.18 tomorrow, the hourly downtrend confirms, the daily lower high is set, and we then watch to see, can bulls hold the low and then confirm a daily trend change? If not, they don't prove anything. The burden is on bulls on these daily charts to confirm daily trend changes to us. NVDA has been struggling. Look at this resistance level. Again, highlighting the importance of the high of last Thursday. 227.77, 227.25. Where did we top out? We gap up open. We reject from resistance by $1, and then we dump and lose the hourly uptrend. So part of my whiteboard preparation for the morning is laying out this game plan. Earnings tomorrow. That's not right. I'm on the wrong day. So the NVDA game plan that I laid out was highlighting the importance of this key resistance level and highlighting, if we break support, the red flag. So daily range is tight. The bulls have to break 223.73. They did. Okay, great. 227.77 to prove anything to us on the daily. If we do not break 227.77, this bounce doesn't really mean anything. It's not impressive. It's just rejecting from resistance and setting a daily lower high. Hourly higher low support from yesterday is 219.11. If we break this level, that's bad grammar. Oh no, break this level and the potential for a daily lower high shaping up would increase. The probability for a daily lower high would increase. So we reject from resistance, we gap up, we reject from resistance, we break hourly support. As soon as 219 breaks, red flag, daily lower high potentially set. So we have to utilize our daily trends and our hourly trends in unison. They shape each other so significantly. So NVDA is in complete bear control, same as the NASDAQ. We got a triple top here. It's not as clear a triple top, it's within $1 range, but it's very close. If we are not getting over this level, the bulls do not prove a thing on the daily time frame, and we may remain relatively weaker. QQQ is our weaker major sector, and NVDA divided by QQQ shows us this individual name is weaker than the weaker sector. So if I'm trying to play NVDA bullish, I'm choosing the weakest of the weak. Imagine you're drafting for a dodgeball team. You're not going to choose the weaker of the weak. You want to choose the strongest of the strong. And those are out there. Tesla, daily, big bear day today. Earnings after hours, bullish, but we're right at the high of the day. So it's nothing massive, but it's continuing to shape up the weekly higher low. So this weekly candle tomorrow, if we were to open right here, right now, we'd be trading up here, increasing probability that our weekly higher low is set. So we got a base of support now in 973, and we can say that's a key short-term level. If we break 973 from here, that's a red flag. Again, I have no more position in Tesla. I exited it pre-earnings yesterday, no, 2 days ago, Monday. So I'll keep an eye out to see if I want to re-entry, but no plans at this point. We'll see how we open. But it is a bullish reaction so far. We still have to have the conference call in 7 minutes, and that might have guidance. And we know guidance is something that bulls are concerned with, not just with Tesla, with the market in general. Healthcare, daily downtrend confirmed with zero follow-through. What happens when you change the trend with zero follow-through? You zoom out and scout a flag. The healthcare sector, which is the pretty much tied for the second most important sector in the S&P 500, there's not a red flag in sight. It's a potential weekly bull flag. It's extremely healthy. We have weekly EMA 12. We're coming off of all-time highs. We had a daily downtrend confirmed with zero follow-through. We have increasing bull volume. So again, if I want to look bullish, I would so much rather look in a name where I'm scouting a weekly higher low. And if I don't want to chase healthcare at this point, I can wait till it tops out and look for a daily higher low attempt, knowing we have a clear line in the sand level. I get so much more confident in my trades when I have a line in the sand level. And I'm going to jump to CCJ in just a second. That's a good segue. But now this 136.53 level must hold, because if that level breaks from here, okay, now we've got a red flag. If that level holds, full bull control. So CCJ, just to tie that in, I was scaling into CCJ for a bullish entry because we're in a monthly, weekly, daily uptrend, and the uranium sector and commodities are hot. So I made an initial entry Monday, and I was going to make a second entry in hourly oversold conditions. We never really got there. And I would have made a second entry if we confirmed an hourly trend change. We haven't done so yet. So I am looking to average up and add to my position. And I am so much more comfortable doing so now because now I have a line in the sand. If I'm scaling in, I've got no line in the sand. We haven't set the daily higher low yet, and I don't have a clear stop level. So I know that my dollar risk, I have to calculate and be sure that I'm not, going too heavy. That's why it's just an initial small scale in. So if we see hourly consolidation tomorrow, I'm looking for an entry to add on, and then we have to confirm the hourly trend change. But I do know that I will stop out of everything if 29.35 breaks. That is now the must hold level, because if that level breaks, weekly consolidation is then significantly underway. And we confirm a daily downtrend. And we have been in a daily uptrend at this point for a very long time, months. So if we lose the daily uptrend for the first time in months, I can look at that and say something's different. This is not, the ideal bull scenario. So 29.35 is now the must hold level, and every trading decision that I make based off of this swing trade plan is now based off of that level. So as soon as I get that level to play off of, the benchmark level, the line in the sand level, whatever you want to call it, it's a big sigh of relief. Okay, we got clarity. This is the level now. Just like the NASDAQ has the resistance level. Financial sector, double top at daily resistance. Our daily lower high was 37.16. We topped out 1 penny below it. I missed that one today as far as looking for a bearish entry there, but a very clear double top. The bulls are going to attempt, if we break the low today, tomorrow, 37.79, the bulls will attempt an inverse head and shoulders, which is changing from a daily downtrend of lower highs and lower lows to a daily uptrend of higher lows and higher highs. So we have to break the low of today, tomorrow, for that right shoulder to try and be shaping up. But like everybody else, not everybody, like many other names, we need a daily trend change back to the bulls to be confident that our weekly higher low is set. There's still work to be done. So I'm scouting to see if that inverse head and shoulders is shaping up. Right now, what team is XLF on? Team Bull or Team Bear? Doesn't have a team. It's a floater. And it's because we're right in the middle of its range over the last 3 months. I mean, look at this range here. We're just tightening up after significant volatility, and we're right in the middle of that range. So I'm watching to see, is XLF going to join Team Bulls with healthcare and utilities and energy, or is it going to join Team Bear with tech and semiconductors? Again, I'm talking about this market environment that has been the last couple of months, because this will absolutely shift again. And the sectors that are on Team Bull will eventually be on Team Bear and vice versa. But we have to be following it by a day-by-day basis. And until things change, that's the direction that we're looking in for. That's the direction that we have a lean in for these sectors. IWM is on Team Bull for me. Why? It stood out a bit stronger. It's certainly not bullish, but it is more bullish than bearish for me, because we held the low of last week to start this week, where many sectors broke the low of last week, and then we confirmed a daily trend change. Now, it's not a convincing daily trend change yet, because it wasn't a convincing bull day today, but it was a green day, and it's a daily higher low and higher high. So the weekly higher low is now set. We've got a line in the sand level. 195.88 must hold. If that level breaks, it's a monthly bear flag. The probability, if I look at this, what's the probability of a monthly bear flag? Let's just say, I'm not sure, 50-50. You break that low, the probability shoots up to 75% for me. Probably more, 80%. We're on a roll today. So daily trend change confirmed. Anything above 196.53 is a daily higher low. How long can the bulls maintain the daily uptrend? Is it going to be the FOMC that dictates the direction that tightening weekly ranges break 2 weeks from today? Biotech sector is on Team Bear. Daily inside bar today, but even if we get the daily bounce going with a bull break tomorrow, anything under 90.92 is just a lower high, which means we can go 5% and still be in a daily downtrend. It's one of the weaker sectors, it's barely clinging to its recent fear lows, and the bulls have a ton of proving to do. If weekly EMA 12 is resistance, it's on Team Bear. If weekly EMA 12 is support on XLV, it's on Team Bull. Dollar. Red day on the dollar, still a daily uptrend. Notable red day. If we get a second red day in a row, it'll be the first time we see 2 notable red days in the last month. Well, not that long, 3 weeks. So we would pay attention if that happened. Along with the dollar, we're watching our US 10-year. It's starting to consolidate, still very strong, still a daily uptrend. No red flags for bulls on neither the dollar nor the 10-year. TLT oversold bounce is underway. A lot of proving to be done. We're just scouting a daily lower high to be the result of this bounce. Daily RSI has very quickly cooled off. Weekly RSI is cooling off. When I say that, I mean no longer oversold. We need to shape up a trend change. So what the bulls need to see is a big enough move to create the space for an eventual daily trend change. What dollar bears need to see is a big enough pullback to create the space for a daily lower high. Same thing with the 10-year. So as of right now, trends aren't shifting. We're seeing consolidation within the trends that have been established for quite some time now, but we're watching for that to change. We know the market environment. The market environment has been this way for a couple months. We're watching for shifts. Every little move, we're not saying this is it. We're watching for clues. Give me signs that this time it's different. So for CCJ, if we hold a daily high or low, this time it's not different. This time it's the same. If we lose that low that is now my line in the sand must hold level, this time it's different. We need to be recognizing shifting market environments so our trading style adjusts to those shifting market environments. And if you're unsure, it just means trade less. The last thing we want to be doing is taking a trading style that works really well in one market environment and applying it to a changed market environment, because it will not work the same way. Guinness. Gold. So gold, and another inverse day. In the past couple of videos, we're talking about, are we going to go inverse with stocks and commodities? That's too generalized. Now it's clear that the pattern has been, over the last 3 days, a little bit inverse between the NASDAQ and commodities, because we have a day like today where all of my positions in my IRA are my commodity swing positions: CCJ, GDX, GLD, SLV. Every single one of those is green today. Every single one of those was red yesterday. Red yesterday, NASDAQ up. Green today, NASDAQ down. So that's simplifying it, but that's the relationship from the last couple of days that has been clearly standing out, and just want to observe how long is this relationship going to last. So on gold here, 4-hour bounce, we can go to the 12-hour, whatever time frame. I'm not sure what time frame is most clear for me. We are in an hourly uptrend. I'm going to treat this 4-hour bounce. You look here, is this a trend change, that little wick? Nah. And that's my prerogative as an individual technical analysis. I get to choose what counts as a trend change or not for me. That's not a trend change for me. So I would call anything under 1982 as a 4-hour lower high. If we confirm a 4-hour trend change, then I'll look at that and say, oh, maybe we're not setting a weekly lower high just yet. I can say, if we break 1939, the probabilities that a weekly lower high is shaping up will increase very significantly for me. And silver is the same thing. 4-hour, fairly weak bounce. Could still be a 4-hour bear flag. That retracement size is bear flag potential still. 382 retracement, EMA 12 resistance, still a possible bear flag. So again, I'm not adding any metals positions because the potential of a tightening weekly range is shaping up, and it would not surprise me if we get a tightening weekly range while we get tightening weekly ranges in equities heading into FOMC. I mean, we're shaping up. We got 2 more weeks to go, but we are shaping up for this FOMC to have a notable impact on how tightening ranges break. Miners, daily high or low, trying to shape up. This is now a key level. If we break the low of today, 39.25. So look at this pullback. Can we see continuation from here? Absolutely, we can see another leg higher. If we get any lower from here, the probabilities of a daily lower high being the result of the next bounce will increase significantly. So I will probably put a stop for my swing position under that level. Because if that level breaks for me, it's a red flag. And then I would focus and watch for a weekly higher low to try and form, keeping a close eye on how the metals equilibriums form. Again, the miners are still stronger than the metals. We're not in a weekly tightening range here, but we're certainly going to be impacted by how these tightening ranges on the metals break. All right, we've done enough talking for today. Do good things. Have a good day. Ask any questions. That is the biggest visible fish in the pond. It's definitely bigger than last year. And that one was actually either that one or this one here. I'm not sure how well you can see with the reflection. was a mother, and I was astounded at how good of a mother that these fish were. They would have their little pocket of baby minnows spinning around or swimming around, and the mother fish would just swim circles around the area that the baby fish would hang out, and they were definitely on patrol and keeping other fish away, and they were with them for a long time. Everywhere I would look along the edges, there would be the little baby cloud and then the protector. Had a first baby duck today, mom and dad duck and one little baby, but they're gone now. Hopefully they'll be back soon. Hope we get some geese babies as well. Turkey babies come last, but they'll be around.